in December of 2015, you came out with a new article today. You're talking about unemployment, and you're saying, what is the real unemployment? Because there's a lot of people out there talking about, oh, this is the employment numbers. These are not the right ones. They're manipulated. So when you say this, what are the real unemployment numbers?
Right, Dave. And that's the reason why we have to raise the question is we all know that the unemployment rate of 4.9%, which is the current rate, is bogus. I mean, we all know that in the past, at an unemployment rate below 5%, the economy was booming. There was plentiful jobs. People could get more pay by moving to another employer. And yet we all know the economy is stagnant at best. And here we are at super low unemployment rate. So something's wrong. And then what triggered me to start researching it was there was an article in the New Yorker magazine, which of course we all know is like a highbrow defender of the status quo, right? Mm-hmm. The old line mainstream media. So they had a writer that did a kind of pit bull attack on everybody questioning the unemployment rate, and he said that anybody questioning this was falling for a hoax, was his word. In other words, any skepticism about the unemployment rate is a hoax. And his main line of defense was, we've got top people working on this, PhD economists. And so I had to almost laugh because, that's a pretty weak defense. And yet that's what the status quo is doing more and more of, is it's relying on these attacks and defending what's indefensible with like expertise. In other words, we've got PhDs, economists on this, you peons and peasants and debt serfs can't possibly question their expertise in this. And so the unemployment rate is a perfect example of how flawed this defense is, because we all know it's bogus and it doesn't stand up to the any kind of inquiry, really, and so that's what my article is about, is like, okay, so how do they decide how big the workforce is? Because, the unemployment rate is based on how many people are looking for a job, how many people have a job, and how big is the workforce, right? Like how many people are available to work. And so that's how you get the unemployment rate, right? Well, so we know that this thing is deeply politicized. In other words, the status quo puts this number out every month, and it's always jury rigged to be low, right? We all know that. And so, but if you go into the so-called PhD economist way of reaching this number, you get a lot of points that don't make sense. Like, well, they get to decide through hocus pocus who's discouraged, who's discouraged out there that doesn't have a job. So we just drop them off. They're deleted from the system. They no longer exist. Well, if you delete 20 million people that you've decided are discouraged, then of course the unemployment rate drops, because the workforce has been slashed. So that's just one example of how they game the numbers.
It's very interesting when you mention that they're continually using the idea that these people have PhDs, they're experts. You can't question what they say. It's funny because science, statistics, the whole point of it is to question it. Nothing's ever settled. And they always try to convince us that you really can't question us. And if we go back to 2008 and we use the same thought process that they have now in the year of 2008, didn't we have experts telling us they weren't forecasting a recession anytime soon? And we had a recession in the same year they were saying it. So I guess we should question them, because they've been giving us wrong information. And I mean, if you go back in time, not just with unemployment, but with other things always change. Things always come out of left field, right field, and people are able to prove that, no, what they're saying is completely wrong. And they've been telling us that, oh, if we do quantitative easing, that's going to create jobs. That's going to create a better economy. Well, has it created better jobs? I mean, where are the jobs today, Charles?
Right. And I think the other real scam that makes this whole unemployment number really hocus pocus is they lump all jobs into one category, and that's how they get the unemployment rate so low. So let's say that sold something on eBay, and then you reported, duly reported your income at $10, that week. Hey, you're employed.
Mm.
You are self-employed. Yay. So we count you as the equivalent of somebody that's just made like $2,000 that week and has full benefits and all that. And as David Stockman has pointed out, he has a chart which I posted on the blog about what we're really talking about is breadwinner jobs. In other words, an income that can support an independent household. Like someone could actually go out and rent an apartment or buy a house in a low cost part of the country and support a family. Now, maybe not, maybe they need a second income, like a working spouse, to really be doing well, but at least they could kind of scrape by on their own income, right? That's a breadwinner income. And, it depends, of course, on where you are in the country. If you're in lower cost parts of the country, that might be as low as $25,000. And then on the left and right coasts, it's more like, if you can't make about 70 grand, you're out, you got a roommate. And so there's a lot of variation in that. But nonetheless, that's the number that counts, because if you want to talk about broad-based prosperity, that's the kind of thing we're talking about, is that people can go get a job or be self-employed and make enough to support themselves. If not in grand style, at least they can have their own apartment or their own house. They can have a used car, and they can start working their way up the middle class ladder. But if you're taking part-time jobs, like you're working 19 hours at Starbucks, and you're lumping that in with no bennies, and then you're lumping that in as a job that's just as worth as much statistically as a full-time job, that's a lie. That's bogus, right? And so what we really need to do is track the number of like legitimate breadwinner jobs. And David Stockman's account, those numbers have declined. That there's actually fewer of those jobs.
Everything is turning into from full-time to part-time work, because we can see that more and more corporations like Caterpillar, Cisco, they're laying off, these incredible jobs, and these individuals are finding it difficult to find the same type of paying job, and they're going to part-time, maybe 1, 2, or 3 part-time jobs, because they can't find that same full-time job with the same pay. And what's very interesting is that CEOs of corporate America, they came out today and they were saying that the overall economy remains mired in this new normal. And when they asked about employment, they're saying that they're expecting employment to decline next year. They're saying 36% of them are saying that they're expecting to cut payroll, not increase payroll. And this is, very concerning, because out of the 36% that's saying that they're going to expect to cut payroll, the other 37% saying they're going to make no change whatsoever. So what we're seeing right now is most likely more layoffs coming down the road here. And this really doesn't look that great for the economy. When we go back to 2008, do you think we're better off today since the Great Recession started?
No, absolutely not. And I did a post a couple days ago where I asked like 30 questions with the idea that, we're told that everything's better based on this low unemployment rate. And just yesterday, another bogus statistic came out. Median household income went up by 5%. Yay. And so that was been trumpeted by the mainstream media as proof that the economy is finally turning around. It only took 8 years. But what they don't cover, and this is another classic example of how if we dig just the tiniest bit beneath the surface of all these so-called good news reports, that they don't pass the sniff test, is median income is it's different than the average income, but it is a lump. You lump all the income together, and then that's the middle line, like right at 50%. That's the median, right? Well, if the people at the top of the wealth income pyramid, and top 5% say, if they all made a ton more money, which is exactly what's happened, that median income is going to go up. It doesn't mean that the bottom 95% made even a dollar more. And so what's happened is, and I've posted many charts of this, the income of the top 5%, the technocrats, the top government bureaucrats, um, corporate managers, the people at the top of the pyramid, their pay is soaring. And so as their pay goes up, well, then that median income goes up along with the average income. But it doesn't mean that 95% of the people just drawing a paycheck are earning more money. And yet it's being trumpeted to us as proof that households are now 5% richer. No, that's not what it proves at all. And so if we look at what we call purchasing power, it's one of those little econo phrases. And what it means is like, well, how much stuff can your money buy now compared to in the past? And so it kind of cuts to the chase, because you can talk about inflation, and that's another number that's gamed, right? It's supposedly 1.2% or something. And yet when researchers go in and they take a metro area, they take a specific, urban area, and they compare apples to apples over time for like rent, healthcare, food, energy, and so on, they discover that it's more like running at 7% in the U.S., right? At least in the urban areas where most people live. And in fact, in some places, it's as high as 12%, where there is really high rent, super high rent increases and stuff like that. So in other words, even if you made 1 or 2% more money, if inflation is running at 7%, you're still lost 5% of your purchasing power, and that's another reason why we're all typically worse off than we were in 2008. Is that there's been a huge erosion of our purchasing power behind this bogus low inflation.
That is true. I mean, if you really look at the retail industry, retail is a complete disaster right now. Stores are closing, Aeropostale, Sports Authority, Finish Line, and many others. And what I'm seeing is the retail industry is contracting. And this shows us that the people, they don't have the discretionary funds to go out and purchase. They're not making the incomes that they used to make. And a lot of people just don't have jobs to go out and spend the money. I know they're trying to convince us that, well, everything's shifting to online, but most of these brick and mortar stores, they have online sites. And when you look at the online sales to the brick and mortar sales, you're not seeing that much of an increase online that says, okay, this explains it away. When I look at everything, I see what the central bank has done since 2008. I see that they continually create money, they give it to the banks. That's about it. Do you see that the central banks, what they've been doing for the past, 7 years now, 8 years, has it helped the everyday person on the street?
No, absolutely not. And I know that you've had a number of guests, for instance, Chris Martenson recently, and who've talked about this issue. And so I won't go into any depth because other guests have already covered it. But in general, what happens is you create money and it's distributed at the top of the wealth pyramid. Then those people then have access to incredibly cheap credit that we don't have. And my example is always like, hey, look, give me $100 million at 0.5% interest, and I'm instantly rich, right? Because I can go buy a treasury bond that pays 2.5%, and then I skim 2% on that 100 million. And I didn't do anything for it, and I didn't have to put up any collateral, and it's like it's all free money to me. And so that's how it works, is that if you create money at the top of the pyramid, in other words, the average person can't go to the Federal Reserve and say, hey, I'd like $10 million at 0.5% interest, because if we could, then I could go run out and buy an apartment building, right? And then I could start skimming the rents like a wealthy corporation or a hedge fund. And so it's super easy to become rich if you get access to cheap credit, and that's why the rich are getting richer at an astonishing rate, and the poor are getting poorer. Is the poor are the debt serfs who have to borrow money to survive or go to college or get a car, and then the people at the top are the ones who own all the debt. And so if any one of us could get access to $100 million at 0.5% interest, we'd instantly become millionaires because we could just go buy a 30-year treasury. And that's exactly what rich people can do. They can buy apartment buildings. They can buy, factories in Kuala Lumpur. They can buy the world, and they're using cheap Federal Reserve money. And so, if we look at the chart of wealth inequality since President Obama took office and basically handed the banking sector everything they wanted, it just widens. It just gets wider every month, And so under a so-called Democratic president who supposedly is there to help the common person, wealth inequality is soaring, and the incomes of the top 5% and 1% are soaring, and everybody else is in a stagnation where their income doesn't go up, or it's eaten away by inflation that's running a lot hotter than the official statistics. And I want to point out another factor here is that if you're an employer, and I've done it all. I've started a small business and I ran it for years and barely survived that psychologically and financially. And I've been self-employed and I've worked for other small businesses. And so I see it from the point of view of the employer and the employee. The employer is getting crushed by healthcare. In other words, if a small business is doing pretty well, they might want to give their employees a raise, but guess what? Their healthcare premium just went up by 25% or 27%. So all the thousands of dollars that they could have given to the employees now are going to the healthcare cartel. And that's a big reason why people aren't earning any more money. Is from the employer's point of view, he's going, wow, you guys are costing me a ton more money here, but it's all in the overhead, the labor overhead. And on a national scale, local governments are getting crushed because their pension funds are earning 1% thanks to the central bank's zero interest rate policy. So they have to use taxpayer revenue, right? Money collected from taxpayers. That a huge chunk of that has to go to fund their pension funds because their pension funds aren't making any money on their investments anymore. So then that starves the local government payrolls because they're going, well, gosh, our payroll costs are going through the roof and we haven't hired a single other person. And so, that's the damage wrought by the central banks. It filters through the entire economy. It bankrupts pension funds. It starves local governments. It creates wealth inequality on a vast scale that, by some measures, exceeds what we had in 1929 before the big crash. And there's absolutely no good done by zero interest rates and quantitative easing, except for those at the top of the wealth pyramid.
So you mentioned how the insiders are getting low interest loans from the Fed. When you were talking about this, it popped into my head that if you're in the club and you're part of the club, this system is fantastic because it allows you to do a lot of different things and it allows you to build your wealth. And the club is small. There's not many people in the club. Everyone else on the outside of the club, it's really horrific for them. They see no benefit whatsoever. That's pretty much what you're saying.
Right. And then the club, which I think is a good way to understand it, it's like a little clique, the private club. And because the amount of wealth that those people have and have access to, thanks to the Fed's policies, they can go hire rafts of PhDs and pay them to defend the status quo, which is exactly why we have all these so-called experts saying, oh no, the inflation is in fact 1.2% when we know it's running like 5 to 7%. And then they tell us the unemployment rate is, less than 5%. The economy's doing great. And then they come up with this median income thing. Oh, if median income's up 5%, that means you're doing better. And it's all like, what it really boils down to is, don't trust your own lying eyes. Trust these statistics. And of course, it's really Orwellian, right?
Yeah.
Yeah, it's really Orwellian. Like, we're told constantly that the statistics say we're all doing better. But as you said, corporate America, which is, which is basically on the cutting block, they're saying things are stagnating, right?
Mm-hmm.
And, you look at corporate America, and it's interesting to look at that, because you go, well, look at these guys at the top of that pyramid are under great pressure to beat their earnings estimates every quarter, right? And with stagnating sales and, like, as you say, less disposable income out there in consumers' pockets, how are they supposed to beat their numbers next quarter? Well, they have to, like, slash payrolls. They've got to get rid of people, because people are the most expensive component of any business because of this healthcare and pension and the overhead costs. And so that's why they lay off a full-time worker with bennies, and then they hire two people at 19 hours a week, and they don't have any labor overhead on them. Yeah, so that works for them.
No, you're right. And what's funny is I just thought of this, and when you said they have the money to hire these PhDs to keep the system going by telling people, well, this is the way it is, these are the statistics, you have to believe us. It reminds me of 2008 with the subprime securities, where S&P, Moody's, they were rating those securities AAA, even though individuals were defaulting on their mortgages, and the securities weren't really AAA. Actually, they were garbage, but they were able to keep the illusion alive because they said, well, these agencies and their PhDs rating this, and the Fed, they're all telling us that this is perfect. There's nothing wrong here. All those people who are saying there's something wrong, you're crazy. And it seems like this is exactly what we have happening today. They're keeping the illusion alive as best they possibly can.
Exactly. And as the illusions phrase, then their defense of the status quo becomes even more frantic and overheated, right? And so everything is now that's true has been labeled a conspiracy theory,
yes.
Right? In other words, like, it was like fixing the LIBOR rate, which is a bank lending rate. That was utterly dismissed by the financial press a few years ago as a conspiracy theory. Oops, proven correct. Rigging in this market. Oh, that's a conspiracy theory. Oh, proven correct. And then here we are with Hillary's email, and it's another, like, conspiracy theorist. This is nothing. And then it's like thousands upon thousands of emails are now proving that no, their conspiracy theories were correct. Right? There is something there.
Yeah.
So. It's like, so it's where everybody that questions this, which, as you say, the role of science is to question what's the received wisdom, and the role of journalism, the role of the media should be cast a skeptical eye on these numbers. Instead, the mainstream media, which is, as we know, owned by like 6 corporations, and it's totally enthralled to the club of big money. It's like they spout these numbers without any skeptical review at all, and so it's left to those of us in the alternative media to dig in and play the role of a skeptical media. And so a lot of people feel the mainstream media has discredited itself, and I hope that process will continue, because we have to stop taking these numbers as good faith numbers and start asking, what's the real number?
I agree. And since we're talking about all of this, and we're talking about, the statistical numbers, them keeping the illusion alive, do you think the central bank right now, I mean, they've done almost everything. They're, Bank of Japan buying equities, ECB buying corporate debt. We have the Fed with quantitative easing buying the toxic real estate. Do you think they have any other tricks up their sleeves, or are they done right now?
Well, Dave, that's an excellent question, and we don't know the answer. And so there's a couple of lines of thought on this. One is that and it's kind of, I think the starting point should be that this is all based on the Keynesian model, right? And it's like the Keynesian model emerged in the 1930s, and the basic idea was, made sense, right? It was put in a fancy package with a lot of dense, econo speak. But the basic idea was, well, what we've got here is a lack of aggregate demand, and that's their term for like people with money in their pocket and they want something, right? They want a good or a service. And so if we could just get money into people's pockets, then their natural desire to go out and spend they'd be able to act on that, and then the economy would boom. And so that mindset is still the basis of all conventional PhD economists. And so the idea is, well, if we could just get money into people's pockets, then they'd go spend it or borrow more money, and then we'd get out of this stagnation. And so that at least is the cover story for all of this monetary policy, right? And so they're trapped in an intellectual cage, really, and the only people who get it are economists who may have PhDs, or they may have degrees in history or something, but the only people who get it are the ones who come from a Marxist point of view, where they're looking at like labor and capital, and they're looking at the flows of capital, and they're looking at the flow of history. And those people are more likely to get it than people who are trapped in this Keynesian cage. And so what if you believe that they're really acting on this Keynesian intellectual framework, then they're going to be they're totally obsessed with putting money in people's pockets, and the only way to do that is helicopter money. In other words, the central bank tells the Treasury, go sell $1 trillion worth of Treasury bonds. We're going to buy them right there. Bang. We buy them. We create the money in 1 second, and we just bought $1 trillion of Treasury bonds. Now you have $1 trillion in cash. Now you give a rebate to every household. You send $1,000 or whatever it is to every household. And we know that this is their mindset because they did that back in 2008, right? As you said, Bernanke was out there telling us there's no recession, the subprime thing is contained, the usual, line. And meanwhile, the Bush administration could see the numbers deteriorating, and so they all I think they gave us, every taxpayer got $300 or something, like yay. But even if they gave us each $5,000 or some kind of huge amount of money that would in fact be $1 trillion or more, to create this aggregate demand, the reality is they're going to fail, because people understand through their intuition that things are not right and that things are falling apart. And so their instinct is to save, not go blow this to whatever money the government gives. So if the government does the helicopter money, thanks to the central bank buying the Treasury bonds, so the government's got a fresh $1 trillion it can just send out as helicopter money, people are going to actually save it. They're going to use that money to pay down debt, because they realize, hey, we got to hunker down here. The future is looking extremely uncertain. I don't trust what the government's saying and doing. I need to have some cash in hand, right? Or silver coins, or whatever people feel is safer than what they've got now. And so there's not going to be a big surge in aggregate demand because it's actually counterproductive. You can go ahead and give the money away, but people are going to squirrel it away and use it to pay down debt because they sense that something is amiss.
No, I completely agree with you. I mean, just as the gas prices have come down, people didn't take the extra savings and go out and say, hey, I'm going to buy a new TV, a new surround sound system. I think what they do is they just put more fuel in their car, or they pay their insurance or whatever. And it really didn't go into retail sales or anything like that. So we didn't see any of that. And I don't think the helicopter money trick is going to work at all to help the economy.
Oh, I just wanted to mention too that the other approach, as you said, was central banks just buy all the assets. They start buying the stock market, they buy the bonds, they buy mortgages. But what nobody in the conventional world, financial world, seems to ask is, well, then what are the pension funds and the mutual funds and the insurance companies that need income? What are they supposed to own? If the central banks own all the stocks and all the bonds and all the mortgages,
Hmm.
then where's the something on the order of $30 trillion of money in pension funds and mutual funds and stuff? Where's that money supposed to go to earn a return? And of course, the answer is there's no place. They're going to earn nothing. So that whole idea is also self-defeating. That's all I wanted to mention.
Charles, is it possible to take back America and make it strong again? Do you know of any way that we can start doing this to reverse everything that has happened?
Well, I have my own views, and I realize they're very they're out on the edge. You know, they're not mainstream. But I think I've concluded that there is a way, but it requires having a kind of money that is outside the control of the central banks and the central government. In other words, as long as they have the monopoly on money creation and distribution, then nothing is going to change. And so you can play around with the edges, but you're not going to really change the core rot of the system. And so this is why I'm a big fan of the technological possibilities of cryptocurrencies. And my book, A Radically Beneficial World, proposes that we create a cryptocurrency especially designed to pay people to do work in their local community. In other words, to create a form of cryptocurrency, not like Bitcoin that's basically just out there and it's another asset class, but create a kind of money that's like Bitcoin. It's decentralized. It's not controlled by a central government or bank or any central agency. It's created in a decentralized fashion. And its sole purpose is to pay people who don't have any work. And this, you can say, well, how could that possibly work? And of course, it can't necessarily work at first if a government says we made that illegal, right? Mm. But it's an idea that could work in countries whose currencies are being destroyed, like Venezuela, for example. Like their official currencies, lost most of its value, and so I think that we have to look at alternative systems that can arise that are outside the control of the central bank and central state, because they're never going to change. And you can look at my book as to why reform will fail, right? I mean, they control all the levers. If you and I could borrow $100 million, why would we let somebody take that right away from us? Are you kidding? That's the last thing I'm going to let somebody do. So the reform, forget it. We need a new form of money. And then with a new form of money, then we can start developing an alternative economy, right? We don't have to overthrow its, people or, that it's this meet the new boss, same as the old boss. That whole model is dead, like just electing a new guy or even overthrowing a government and inserting a new group of new bosses. That stuff, that never works, right? Because then a new club just replaces the old club, right? I mean, you still got the club at the top. And so the solution is decentralized, right? And we see a lot of this kind of stuff happening, like crowdsourcing, crowdfunding, the intelligence that can be of people networking, community economies. And so right now, all that stuff is really outside of the mainstream, and it's maybe 1% of the economy. But if that starts growing, then we can see how we can make the country great again by decentralizing all the money and power. And then people will have the means, they'll have the capital, and they'll have the means to grow their own community economies instead of relying on corporate America or the central banks. So that sounds pretty idealistic, shall we say. But, if you look around, you can see there's a lot of this kind of networking and the cryptocurrencies like Ethereum. There's a lot of stuff going on. And if that stuff grows, then we have a chance.
And I do agree, if we can remove ourselves from the central bank, I do believe that we can really restart America, because in my mind, I think the central bank corrupts everything around it. And it's not good for the people. It's only good for the select few. And I think you're right. If we can remove ourselves from the central bank, start something where no one has control of it, I think it would be better off for America and other countries.
Right. Because it's these centralized policies that have basically suppressed the the bottom 95%. In other words, I'll just give you an example like self-employment. As far as I can tell, there's maybe 4 million people who are truly independently self-employed in the U.S. that don't need a working spouse with health care benefits, and I know that because I've looked into the IRS data, and there's only about 4 million people who deduct their own health care insurance costs. And so, and this is indicative of how difficult it is to get out there and make a living on your own. In other words, there's all these restrictions, there's regulations, and high taxes, and so there's so many ways the system could make it easier for people to get together and become self-employed, and you look at these things and you go, if you let people have a chance, if you let them have some capital and have some freedom, then they're gonna figure out ways to make stuff work on their own. But you have to get away from centralization.
Charles, I really appreciate you coming on the X22 Report Spotlight. Thank you very much. Once again, can you just tell people how they can see your work?
Yeah, visit me